So the final video in this playlist is understanding the exact process of looking to take those trades for those higher probability entries and exits. So later in this video, so make sure you keep watching, we'll go through exactly how you're going to look to take that entry, okay, the actual entry model, where you're looking to take your profit targets, and how you'll use all this, what you've learned so far in this playlist, to combine all the structures, supply and demand, multiple time frames to your advantage when taking a trade. So we'll carry on again on the same pair of the US dollar Swiss franc as this full example, because it's a great example to show you how to use all this together combined. And go away after watching this and please make sure you apply this into the markets and back test it yourself to help your trading going further. So the first thing we look at, okay, again, is the market structure. So let's look at the actual structures. We had a pullback in the market and a break of structure. So potentially here we could look for a pullback to supply to continue down, okay, from this market. So we can mark this out as current interval. So currently we want a swing pullback. We could see continuation bullish back to the swing supply here. Now we zoom in closer, we also have the internal structure here. So the internal structure, we had a drop down, we had a pullback, drop down. Now it looks like we had a break structure, but we actually swept through, I believe, and then another break lower. We've pulled back into this area, we've dropped down, but we've failed to run this week low, and we're starting to see a pullback. So again, look, we're going to identify the two types of structure there. We've got our swing structure, our internal structure. Now all this is important, and you can mark this out yourself when you're doing your structures. We didn't do this in the first video's playlist. I was wanting to bring it all together in the end so you can see exactly the process when you're doing this. So there are your two types of structure. We're currently bearish until we run through this area of internal supply, and potentially if we do run through the supply, it's going to show us the shift of structure back up to the swing supply. So right now we are still looking for potential sells until we see a reversal of internal structure there and the internal supply is removed. So that's your daily time frame. Let's drop down to the 4 hour. So the 4 hour, again, now it's going down through those time frames, and you're going to do the same thing. We're looking for the potential bias. So we have a bearish break of structure, a pullback, and you're still looking for this week low to be run. Currently we're making a pullback. Does not mean we're going to fully reverse through this area of supply. Now this is our swing supply on a 4 hour time frame. We could potentially see price pushing up, okay, and continue to run through this supply. Now it does that, we already understand on a higher time frame is a potential pullback to the swing supply on a daily. So currently that's what we're looking at when we're looking at our swing structure. Now looking at our internal structure here, we can start to identify that we've had this break to downside. Now if you include this pullback or not, it's totally up to you there, because it's more of just a sweep through, pull back into supply, and we start to see that internal move back down. Again, it's the same price action, run of this high where we have liquidity into areas of supply, and we continue to run down to that demand. So again, there is our swing, our internal structures, and it's key to understand the two types of structures here that we can see on the market. Now we do have the third type of structure, which we haven't yet included, which is that fractal structure. Understanding our entry model, we have a few different choices here. Let's just remove these now. We understand where we're looking at the market. We're looking to take our trades off our middle time frame always if we can. Now your entry model will come off for a smaller time frame, but you're looking to go with the medium time frame. We're going to combine all this with the higher time frame. So right now this is a higher time frame internal supply. It's also going to be your medium time frame swing supply. Now we have our medium time frame internal supply out, okay, confirming that that higher time frame supply is holding. So when price comes back to this area of supply, that's where you can look for an entry. Okay, we have a few different entry models I'll go through. An entry off that area of supply with your stop above the high, and you can look for a first target to run this swing low, and then look for a run to this area of demand. Or you can just look for a price to run to that demand. That's how I look at trading this. Once we understand where price is pushing through. Now you can hold it for this demand. If you see price breaking through, you can look to run to next demand, which will be this area over here. And that's how you can actually look to take partials along the way. So you look to take profits at your areas of supply and demand. So there'll be another area of demand here where you look for price to run to, okay, once we run through this area of demand And you continue to do that until price eventually runs this weak low down here of the swing move. This is your internal demand on the way down. So we have internal demand. Now it's not going to be areas where we're potentially looking for bounces off for entries, but it's good areas to expect a potential bounce like we saw here previously, and profit taking areas. That's why it's important to understand where these zones still sit. That's one way of looking at an entry. You can just use this time frame, your medium time frame. Okay, now this is going to be a swing area of supply on the lower time frame, so you can look for that as your entry. Now the other way you can do it is we can also confirm that swing, wait for the internal area to shift out. So if we now go closer in to this 4 hour and we start to mark up our fractal structure. So we have a break here to the upside of fractal structure. I can make this now obviously that internal structure. Now you should understand all this on the previous videos. Now we have this as our low to be shifted through. We do have a small break here to downside. So again, we can mark that out as our IBOS. And then we've got this as a potential area, okay, of supply. Now we can mark that out as our internal supply. So we're looking for internal supply, okay? We're looking then for a shift out of the internal supply, which will be a swing supply. And what I mean is we now mark this out on a lower time frame. This will become my swing supply, and this would be the last breakout which create that swing supply. Okay, we can look for that, and this potentially be the last low on the 15-minute. Now we do have, as we went through before, a potential shift here in structure. Okay, so you may not have taken that trade, but understanding we're coming out a higher time frame, it's always going to have stronger weight coming off the higher time frame. So now if we go down to 30-minute, so now we can identify what our entry model, and again, we don't need this level, we already marked it. When we start coming back into this area of supply, we looked at the entry we could have taken off this swing supply. Now we have the option, once you identify this breakup, this breakdown, we see this wick through, it removes this area of demand, leaving this supply. We can now look for sell instead of this supply. So you can look for an entry off the internal supply on your entry time frame. Instead of this swing supply entry, you're reducing and waiting for that reversal out. Now looking for a run of this low, you got a 6-to-1 or just over 6R profit. Now this is how you can start to generate more profits, understanding the use of your multiple time frames. Now that's how I look for entry, stop above the high of the zone to run for the low. Now if you go back to the 4 hour quickly, remember we had our first area we can mark out here. So this becomes our area of internals. This would be a previous supply where we can mark out a swing, sorry, back that off. That wants to be a demand, so swing demand. Now we go back to our 30-minute again, and this is where we will identify where we're expecting price to want to run to this demand. So now we've gone from that 6R to 13R, and that's how I look to do this. You can look to take profits off this swing low. So you're taking partials here, so you're basically in a break-even position, or you've taken all risk off your trade. Then you can look to target this as your final target for 13R. And that's how you compound and build your account. So you're looking to qualify your supply and demand zones on each single time frame. You're looking to use multiple time frames with multiple structures, multiple supply and demand zones. It's all about using top-down analysis here. So there is how you can look to have taken that trade. Now, if we zoom in even closer, we also can apply our fractal reversal. And this is how you can then create even higher profits in the market. Hey traders, we'll get back to the video in just a second. But if you're over 50 and serious about achieving financial freedom before retirement, listen up. One of my students, Danny, had lost nearly 300,000 trading on his own. After joining our 90-day profit trading system, he's made back over a quarter of those losses using the mechanical strategy we teach, and he's just getting started. This program is designed for traders like you, 50 and over, who are ready to finally trade profitably. With limited spaces available, you'll get personalized support and lifetime access to our community. If you're serious, click the link in the description below to secure your spot today. Let's get you on the path to financial freedom. All right, let's get back to the video. And we're going to understand this was where we identify that break to downside. And again, this is going to give you a low here as a potential first target, just to take risk off that trade. And this would be my area of fractal supply. So just like before, you can look to take your entry at that supply. You'll stop above the high plus your spread in the market. And you can look, this is your first profit target to take risk off the trade. Or you can look to run, okay, you've got, this is your internal demand, but you're looking to run, again, you can look for the market to run to this low, which is that first low you're looking at, okay, which is now 11R instead of 6. So you've nearly doubled that risk to reward, going down to a fractal area of supply. And then you can look for price to run to this medium time frame of demand. And that's where it comes in handy to understand that's where you're potentially looking to target, is your medium time frame. Now using this, you now generated a 27 risk to reward. Now these are practical trades you can take, and these are some trades that you can understand that you can look to trade the market. Now whether you decide that you can look to take profit at this swing low on this fractal entry, or you can look to take profit at, okay, this swing low if you're taking it off an internal supply, either way works. You can look for this as a first target or this as a first target, depending on the fractal entry or the internal supply entry. Then you can look for your final target based on your 4-hour time frame area, which will be this swing area of demand, as we're coming out of a swing supply on the lower time frame. And that's where you can generate your 27R. Now it's not going to be a full 27 profit, because depending on whether you decide to take some profit off here, some profit off here, and then your final target here, that's absolutely fine. But I will leave that up to you to decide the best way for you to exit your trades. One thing I will give you advice on is always look to take partials on your trades. But understanding the use of your structures went through in the first video of this playlist. Then understanding how you mark up your supply and demand zones with the 3 types of supply and demand, and those 3 types of structures as I went through in the second video. And then understanding the use of the multiple time frames, whether this being a daily 4-hour and 30-minute entry I'm showing you right now, or whether it's a 4-hour, a 30 or 15 minutes, and then a 1 or 5-minute entry. Either way, this will work on any, because price is fractal in nature. This is just one of the types of entries that I personally use. I have many more different entries that I'll look at trading. This is one of the most easiest, simplest ways for you to look to trade. Now we can implement into this liquidity, imbalances, and much more to make it even more profitable for you. But I've shown you a simple way within this playlist to combine all this together. Now, if you want to take it even further, then I do suggest checking out that 90-day profit trading system. And there'll be a link over at the end of this video for you to check that out right now.